Now, the International Monetary Fund has a message for the US Federal Reserve. Don't do it, at least not now. The head of the IMF has taken the unusual step of asking the Fed to wait a while before raising interest rates from near zero, citing the slowing US economy and low first quarter growth. Our Shin Se reports.
A warning from the International Monetary Fund urging the U.S. Fed to hold off on its rate hike until next year. IMF Chief Christine Lagarde said there is still too much uncertainty about economic growth and job creation and raised concerns about inflation.
Regardless of the timing, higher U.S. policy rates could still result in significant market volatility with financial stability consequences that go well beyond the U.S. borders.
IMF analysts also said waiting too long could cause inflation to rise too quickly, while waiting a little longer would provide valuable insurance against the risk of disinflation, policy reversal, and ending back at zero policy rates. They're also worried that the U.S. won't reach the Fed's 2% target until mid-2017. The Fed has held the rate at near zero since the financial crisis in 2008. Her comments come at a time when the Fed had been showing signs that it would delay a rate hike until there are stronger signs of a recovery. Fed Chair Janet Yellen had previously suggested that the central bank would raise rates for the first time in nearly a decade near the end of the year if the economy was growing steadily. But the U.S. economy shrank to 0.7% in the first quarter, and growth projections are murky. The fund estimates 2.5% growth this year for the U.S. economy, higher than Wednesday's OECD report that slashed growth to 2% from 3.1%. The think tank said the strong dollar is dragging the economy down. All eyes are on the next Fed committee meeting scheduled for mid-June, as the Fed chair may provide some indication of whether she will continue with the initial plan to raise the rate, and if so, when and by how much. Shin Se, Arirang News.